Are we on the verge of a shift in the housing market as we head towards 2025?
Today, we'll uncover insights from top experts exploring how Trump's policies could impact mortgage rates and buyer confidence.
Plus, our AI-driven summaries will give you the key takeaways in just minutes.
Find out why higher mortgage rates may limit home accessibility and how foreclosures could rise.
Stay tuned for valuable insights that can shape your real estate investment strategy.
Next, we dive into how Trump's presidency will flip the housing market, featuring insights from Reventure Consulting.
Today, we're diving into how Trump's presidency could influence the housing market by 2025.
Many experts believe his policies could lead to both changes in mortgage rates and buyer confidence.
What is the core assertion here about mortgage rates?
Trump's presidency could correlate with rising rates, impacting overall housing demand.
That's fascinating. Could this actually deter potential buyers?
Absolutely. Higher rates could limit accessibility for many.
So how do mortgage rates factor into this?
Rates near 7% might deter buyers, especially first-time homeowners.
Could this create a more competitive market?
In theory, yes, but buyer confidence is key to market health.
What role does economic confidence play here?
Trump's presidency could inspire more buyers to enter the market.
Could we see a spike in applications as a result?
Potentially, especially from those waiting for the election's outcome.
Affordability looks grim. Can potential buyers handle those payments?
It's daunting. Many are spending up to 40% of their income just on housing.
Does this limit their options significantly?
Yes, it locks many out of the market entirely.
What predictions are we making regarding foreclosures?
Expect a rise, as current assistance programs might be rolled back.
Is this linked to any specific policies?
Yes, Trump's approach may lead to fewer protections for buyers.
So what's the bottom line for home buyers?
Stay informed and adjust strategies as the market fluctuates.
It's going to be a wild ride until 2025.
Indeed, stay tuned for potential market shifts.
Diving into the electoral impact on the market, let's dissect Trump's win.
Graham highlights how this affects your money and investments.
What's the crux of Graham's thesis?
Basically, it's Congress that truly drives market outcomes, not just the president.
Interesting. So where do the real returns come from?
Surprisingly, divided Congresses yield the best returns.
What do the numbers actually say about past presidencies?
Republican states average higher returns, but Congress plays a pivotal role.
What about divided Congress?
Oh, that's where it peaks. Both parties controlling branches leads to stability.
So how should investors act during election years?
Historically, getting in before the election works best.
What if they wait until after?
It drastically reduces their chance of winning.
What about companies that donate politically?
Interestingly, bipartisan support leads to better financial performance.
So it's not all about party loyalty.
Exactly. The economy's health is far more crucial.
What does Graham predict for the market under Trump?
He anticipates fluctuating dynamics between clean and traditional energy.
So should investors be wary?
Investing based on political promises can be risky.
What's the takeaway for investors moving forward?
Prioritize consistent investments over reacts to political shifts.
And diversifying will help as well.
Absolutely. It's the safest route in uncertain times.
In today's video, Sierra 55 shares their incredible journey after Hurricane Helene struck Tennessee.
They've been on the ground for weeks, tirelessly aiding those still in need.
So, what's the current situation according to Sierra 55?
They confirm the need for help is still huge despite the hurricane hitting weeks ago.
Could this be an ongoing issue for the community?
Absolutely, the conditions have not improved for many.
How are volunteers coping with this ongoing struggle?
They're facing logistical challenges while still striving to meet community needs.
Isn't it amazing how resilience thrives even in such turmoil?
Indeed, the community's spirit plays a crucial role in recovery.
What's the status on those reported missing?
Currently, there are 567 individuals still unaccounted for. The crisis is far from over.
What impact does the colder weather have on recovery efforts?
It's critical, as many affected lack adequate shelter in these temperatures.
What does the future hold for relief efforts?
Increased volunteer teams are essential for sustained community support.
How long should we anticipate community recovery will take?
It's going to be a long journey, but hope remains strong.
What's the key takeaway for those watching?
We need ongoing support for these communities. Every bit helps.
It's vital that we lend a hand whenever possible.
Absolutely. Supportive actions can make all the difference.
Today, let's explore the critical choices the U.S. government faces between inflation and hyperinflation.
Right. The distinction is fascinating, how these factors influence the economy and our finances.
What are the real implications of hyperinflation?
It's a game changer. Countries often don't foresee it until it's too late.
What can we learn from hyperinflation in places like Venezuela?
Absolutely. Those patterns reveal crucial signs to watch.
What is the current state of U.S. national debt?
It's astonishing we're stacking up $2 trillion in losses yearly.
How sustainable is the current tax strategy?
Not very. Piling more debt won't fix the fundamental issues.
What does the future hold for inflation?
Expect prolonged impactful inflation unless there are significant cuts.
What's the key takeaway for investors?
Investing in real assets is essential for protection against inflation.
Today, we're diving into the exciting world of AI stocks that could 10x soon.
Absolutely. AI is revolutionizing industries, and that opens up major investment opportunities.
So what's Ryan's core message about these AI stocks?
He indicates AI isn't merely a phase, it's reshaping the investment landscape.
What's a great example of this shift?
The ongoing success of stocks like NVIDIA illustrates this perfectly.
What about investing broadly in AI?
Ryan suggests ETFs as smart ways to capture growth across the sector.
How do these ETFs compare?
They vary in focus. Some are tech-heavy or specifically targeting AI.
NVIDIA seems to be a favorite among big investors?
Exactly, it's like the backbone of AI hardware production.
What about Amazon's approach?
Amazon harnesses AI across its supply chain, driving efficiency.
Where do we see AI investments heading?
The expansion is likely as AI gets embedded in all business sectors.
Will new firms emerge?
Absolutely. We could see startups evolve into major players.
So what should investors take away from this?
It's crucial to stay ahead of AI trends and diversify investments.
We can't forget about balancing risks too, right?
Indeed, that's essential for a successful portfolio.
Today, we unpacked a fascinating blend of perspectives on the economic upheaval driven by political changes and technological evolution.
That's right. Ryan Scribner highlighted the blossoming sector of AI stocks, showcasing how crucial they are for future investment opportunities.
Absolutely. And Jerry Robinson's grim warning about the looming debt crisis reminds us to prioritize assets over cash.
Exactly. Meanwhile, Stephan's analysis emphasizes the need for consistent investment strategies despite the shifting political climate.
And who could forget the Sierra 55 team, who shared their important message about the power of community resilience after Hurricane Helene.
The insights shared in this episode are invaluable for anyone looking to navigate the complexities of today's market.
If you found this discussion enlightening, don't forget to hit that like button and subscribe to our channel.
By subscribing, you ensure you won't miss out on future content that can help shape your financial strategies.
For more valuable insights, check out our other videos, and until next time, keep questioning and keep learning.